We'll give it 2 minutes and then we'll go ahead and start. All right, guys, but we'll go ahead and start. Let me set up real quick. So today's focus is mainly going to be around volume profile and starting with the basics, right? What is volume profile? We'll touch a little bit on market auction, maybe 10, 15 minutes. We've touched it all out before, right? And most of you guys should understand the concept of the market auction theory. And then kind of dive deep into volume profile, and I will explain from the beginning what it is, the components of volume profile, why do we use it, right? And then kind of day to day, week to week plans, and how do I utilize volume profile in trading myself. So that's the course today. Hopefully it's concise enough where you guys can look at it or reference it moving forward. So let's get started. For newer people, welcome to the Discord. If you're not read Trading in the Zone, I suggest you start with that. The second piece, which this class will help you, is the language that we use for volume profile, right? It's almost like learning any new language. You just don't pick it all up. You're going to have to piece by piece learn it. A lot of people have expectations for themselves that they can just, hey, it's an indicator. This volume profile is really not an indicator. It generates information for you so you can make decisions, whatever the time frame you're on. So that way you can trade and be in alignment with the market. It's not really an indicator, buy or sell. If that's what you're looking for, probably the wrong Discord to be in. Then there's some guidelines around the Discord. You guys can, once I upload this PowerPoint with the actual watermark this time, you guys will be able to use it and kind of reference back to this. But these are basically the key components of our Discord and what we use it for. So I won't spend too much time on this. If you're trading futures and you're using those funded accounts, I'm sure there's a lot of them. I know only one that I think it's Apex, and I think there's Top Step that you guys are using now. I'm sure there's more. You have to treat that as real money. I'm just putting that in disclaimer because a lot of you guys are starting to use that. So I would suggest that you minimize the number of trades, that you really accept it as your real money, because I'm pretty sure you have to buy those accounts and it's not free, right? Nobody will do that, and you guys keep blowing it up and you keep buying it. You're enhancing somebody's profit, but that's not yours, right? YouTube videos. We've done this before where we did the combo of VP and TPO, and you can find this on Rocket's channel on YouTube. But I also posted a link here, and I thought this was a really good session that went over the VP and TPO. But today it's going to be a little bit more volume profile and no TPO at all. Some terminology might be the same, just the concept is identical in some cases, but you use pieces of market profile to help with the volume profile, okay? So auction process in the stock market, right? So this is fairly, I've covered this many times, and most of you guys should be able to explain this to your kid, and your kid should walk out understanding something as long as they're a little bit older, right? Market spends time in balance and it goes to imbalance. And when it's in balance, it means the prices, the participants are happy in trading there. They found the fair value, they found the fair price to be in. And it takes, other time frame participants, whether it's bears or bulls, to drive market out of balance. If you're looking market in balance on 1 minute, you don't necessarily need other time frame participants. We're talking more about whether it's a daily volume profile, weekly and monthly. And the higher the time frame, the more effort is it going to take to break those areas, right? For instance, right now, ES is it's back in the quarterly value area, meaning we are in the first 3 months year to date, we are trading within the balance right now. So we'll cover that during the live session, and I'll touch back on some of these topics. But to get out of this balance, we need information about the market to generate something where people disagree on the current value that we're in. And that's typically what happens day to day, week to week, month to month. And you do use the multi time frames, right? Whether it's daily, weekly, monthly, or quarterly, volume assessment to figure out, who's where. And what I mean by that, what pieces of information is weekly profile telling you versus monthly, quarterly. So that way you don't get surprised when, let's say you're trying to short something and then all of a sudden you get a spike in buying. You catch a bid and then you're like, oh man, I didn't see this. Well, most of the time, short-term traders are within the balance. They like trading the fair value, and other time frame traders look for advantageous price so they can surprise you when the price is dropping, that instantly you get a pump or a drop when you revisit. Okay. So any questions on this slide? Okay. The last piece of that is when you're coming back, right? When you break an acceptance of the balance, you want to defend the top. And I'll cover that a little bit more on the live session where I explain, what are the ranges, what are the balances that we've been in, and when you reject it, what happens? Usually that means when you're entering in a previous value zone, you're most of the time you're going to test the opposite extreme because that's where previously value was found, buyers were found. Therefore, there's a high chance they revisit that. And here's just a quick sample from the charts itself. When you have a bracketed or balanced market, right? Market always goes balance to imbalance, balance to imbalance, just like we did with ES from the 5300s, right? So that's the example on that one. And then I added this chart that I posted for you guys not too long ago, which is basically relevant now, where we had the balanced market, right? We spent some time balancing here. Then we had another, price discovery higher, right? The arrow is showing that they are disagreeing on this price and they want to go higher. My rule of thumb when I'm looking for these range tops is that you at least want to have 2 touches on the bottom, 2 touches on the top to make it a range. If you get more, I think it reconfirms the value and that they're happy trading in there. So just something to keep in mind. This is more of an art than science when you're trading ranges. Could I have drawn this line right here? Pointer. I mean, I could have enabled, the bottom of this to be right here as well. That's okay. You would have 2 touches. This one came very close, so you can definitely do that. Don't be a perfectionist when it comes to balances, right? There's high chances that you will fight yourself on majority of this stuff, right? So approximate when you have candle overlaps, you're looking, even there's one here. You're looking for balances. You're looking for price discoveries. A really good setup in terms of balance to imbalance is when something is in balance and it's trading here and then it pops above it. On the first pop, if it fails to hold this right here, that's pretty troubling because then high chance you're gonna crack through the bottom and look for initiative sellers to take over because there was no value found higher. So that's typical behavior in balance imbalances, and you guys can see it when we had this balance. They popped above and then they came back 2 taps and then they proceeded higher, right? And now you see how and I added some notes here to the right that you guys can read. We broke this distribution if you want. We came back to the top. A lot of buyers were expecting this right here at 66, which is a very important level for ES. And then ultimately, they came back to this range right here. And then the next level, right? They spent some time here, but not a lot. In this range is most likely they can come back all the way here to 48.40 because you do have an LVN. Is there anyone on the call that doesn't understand what LVN is? Man, I am such a good teacher. Wow, I'll just tap myself on the back.
I just want to make it a low volume note.
Yep, and somebody else wanted to say something. Okay, it is a low volume node, but what in terms of price and value, does anyone know how to answer that? What does LVN equal to when you talk about price and value or time, right? I'm trying to draw letters here, but I don't know if I'm pretty good at it.
A rejection of that price level.
Okay, anyone else?
Price didn't spend too much time there.
In LVNs? I think would be the opposite. When you have an LVN, so think about this, and I'm asking this question because a lot of people get it flipped. When you have a high volume node, right? When you have a high volume node, I don't know where my pen is. Let me just highlight it. So let me do a laser. So when you have an LVN like you have here, what does that mean in terms of price, value, time? What does that mean here? Like this one right here. This generated this high HVN here. What does that mean?
It cut through and didn't spend much time there.
No, HVN. Listen, this
So-
right here. This right here is equal to this HVN here. What does that mean in terms of price, volume, time?
That they spent time there and there was a lot of exchanging of hands.
Yeah,
They were happy.
They were happy. They were happy to trade in this range right here. Okay. And you generated HVN. When you have an imbalance or single prints, I'm bringing up a term from market profile. When you have single prints or emotional buying, you get candles like this that leave a little bit stuff behind. So now, if you want to come back to these emotional buyers, what should the emotional buyers do when it reaches their level? What do you expect them to do?
Sell.
You're expecting them to defend this level so they can actually potentially go long. One of the better setups when you're trading volume profile on higher time frames, more than, I would say, daily and higher, right, which is all we use. If you do have some of these single prints like here, and I'll show you guys this live on the charts, when you have these LVNs, isn't this where the price discovery started this trend? Like right here? Is there anyone that would disagree? I mean, you're consolidating for quite a bit, right? So from December to here, you're consolidating, and then you broke this. This is the LVN that they said, hey, we don't want to spend a lot of time here. We don't find a lot of value here. We're just going to go higher. So there was advantageous level for somebody to go higher. What might not seem advantageous to you, let's say you're a short-term trader and we are trading right at the top line. Would you go along here?
No, you shouldn't.
Why not?
I guess as a breakout trader, that's something that they would do.
That's a breakout trader that might do that, correct? Right. So if you think about it, I'm going to go back. A breakout trader might do that, right? But there's a high chance that, when you do this right here, that you can go and get destroyed. And a lot of times that's what happens, right? It's like, man, it was a breakout, but I didn't get the move. And now what's happening is this was one of the bigger consolidations that we've had, right, in 24. And we're coming back to that level. So you can expect naturally the buyers to come in to this LVN. If they fail to hold this LVN, what would you guys target? Just trying to figure out if you guys following along.
$36.
46.
I think.
I would take FVP on this bracket, and what would I look for? There should be a POC somewhere in here, right? So you would
Yeah.
look at the POC here and you would find out, well, this is where the fair price was of this balance. If it was a fair price here and you crack through these emotional buyers at one point, there's a high chance you're going to go to 48. I'm drawing random 4,800 or so here. And then ultimately you would find where's the bottom of this, and that would be the level. And then you see a large LVN that's sitting right below that right here, right? And that happens to be price discovery. Whenever you have price discovery or a trend up or called markup or markdowns, we're not going to spend a lot of time there. We're just going to flush, right? Unless it's, orchestrated selling and it stares down like little by little, where they're taking off. That's different. They're going to fill the volume and time and value in those levels. But typically, I would say people say elevators down, but we also do elevators up, right? We've been running aggressively lately and we've left quite a bit of LVNs behind. So trading HVNs is very good, but understanding where your LVNs are, where they can defend those, where the trend start is also important, right? And that's why I highlighted this one on this chart. So that you guys understand the difference between HVN and trading. And then from HVN, when you have an imbalance, you're going to most likely leave an LVN. And that's typically when you look at this chart right here, right? Acceptance, right? So if it cracks LVN, you see where we're looking for acceptance. On the retest of that range, we want to see the buyers defend this, then that means you're accepting prices higher. If you fail inside, like you did, let's say in this chart, that means the price was rejected. There was too much excess on the top of inventory and they sold it back inside. Okay. So a lot on that slide, because I tried to put a lot of, factors and theories in one, but I think it's a pretty good slide for you guys to understand. And believe it or not, this whole slide happens on every time frame. So this was a higher time frame candles. I believe it was daily. But if you're to go on 5 minutes, I am pretty certain you can find this in 5 minutes as well. If you don't believe me, just chart it yourself and you'll see that everything happens balance and balance. And for your, we'll get to it here shortly. But for you have to understand other time frames and what are we doing? Are we framing up, down? And what is the other time frame telling you on should you be buying a dip or selling the rip, right? Okay, this one's fairly easy. We bought a buyer if he wants to. You can put some bids. The seller is gonna put some offers, and then the dealer is basically there to combine the two, right? Their job, or a market maker or a dealer local, is to kind of match the highest bid with the lowest offer. Once that comes together, you got to trade, right? A lot of people get the idea that there's, when the market's trending up, that there's more buyers than sellers, and that's just wrong at its core, because you can't have more buyers than sellers, because if you want to buy something, somebody has to sell it to you. How you determine the aggressiveness is who was willing to either pay more or sell for less. That's, the ask and the bid. We've covered this in the last class, but that's the concept of us understanding aggression in terms of the stock market. If you're seeing a lot of aggression on ask and their price is trending higher, well, somebody's eager to get that product at that price. And if somebody's selling at the lower price than they initially asked, it means they want to get rid of it and they're willing to take a little less. That makes them an aggressive seller. Okay. I think we've covered this. Is there anyone that doesn't follow market auction theory, or you need help explaining it, understanding it? Okay. All right. So most of you guys should be able to answer these type of questions when they come up to you. Is that correct? Is there anyone that doesn't know the answer to any of them? Okay, great. Because I'll send a quiz after this class so we can see who's got it. All right, market auction continuation. So just know that there are short-term traders and the long-term traders. As a short-term trader, they are looking for a fair price within a short period of time. And usually that's, the value areas are going to be compressed. The ranges are going to be tight when you have short-term traders taking control. Because if the fair price works out for a buyer and seller and we can profit from it, then it makes sense that we stay in that range as long as we can until other time frame participants find more information and they break let's say the balance or initial balance, and they deviate and auction higher or lower. That means that they are no longer agreeing on the current price where you had a two-way auction on the short-term trading. The bottom tip, this is very important that you guys understand if you are waiting for initial balances. If the unfair high and unfair low established in the IB period, if we hold throughout the session, the IB, the short-term traders are in control, and if IB is broken, that means other time frame participants joined the auction during the, let's say, the 30 or 1 hour time frame from the cash open to 9:30. So I would definitely keep that in mind as you guys are progressing and learning and teaching yourself patience. Keep these tips and hints in the back of your head so that way you can incorporate them in your to-do list and not to-do list as you're trading. Okay, I'm gonna go over this. We cover this. But the only piece that I would want to make sure that you guys understand is here. Long time frame buyer will not be attractive to a long time frame seller. There are very low odds that you're going to get that. Just like you guys, I don't know if you guys recall, but a couple of months back when I said all these banks that are increasing targets for SPX 6,000. Remember, we had the discussion about the even numbers and news just putting out 665, 7,000. Usually marks a top is coming in. And obviously, we've had some recent pullback now. Usually, long time frame buyers don't buy from a long-term seller. So if somebody bought October lows, let's say as a buyer, and now he's trying to get rid of it at the top, it's not going to be a long time frame participant that's going to buy that at the top and wait, 45 years for it to come back or whatever that time frame is to make money on it. They're going to look to buy below the value so that way they don't have to wait and they'll let everybody else do the work for them and drive the price to a level. Market auction theory, 3 components: price, time, volume, that equals value. And I think all 3 simultaneously play a role when you're trading to understand, is the price being accepted, if it's discovering new levels, if it's going up or down, and then time is used to regulate that opportunity. And you guys see that a lot, right? Sometimes the level just gets tapped and it explodes from or down. And there's not a lot of time spent at certain levels. And that's basically because the opportunity is there for a moment, time wise, and then it's not. And you're most likely not going to get the best fill or no fill for you if you're not already sitting there at that level via limit orders, right? And then volume is our confirmation tool. I would say, the higher the volume that you have on certain levels and when you're trading, that there's a higher potential that it's actually validating the price action that you're having. Okay. Any questions on this? Make sure you understand this level here because directional performance plays a big role from here, plus the value area placement and the width of the value area. Okay. I think we covered this. I just want to kind of speed up. I would say that this is important for you guys to understand responsible initiative activity. If you are struggling, because sometimes it's opposite to our natural behavior, right? For the humans, what you're expecting to see and what happens, right? Responsive activity is expected behavior. Initiating activity is unexpected, especially in bracketed markets. So I would say you really have to understand this and you have to chart it so that way it makes sense of what you're expecting. Because a lot of times where people short is where you're not expecting the initiation to happen and go lower. You usually get a responsive activity that pushes the price back in and drives it higher. So if you're not is there anyone that doesn't understand this, like responsive initiative activity that for volume or market profile? Is there anyone that's confused? Oh, that's good to hear. I mean, good to hear nobody, which makes sense that most of you guys should be up to par on this and what it means. So this is the chart that we've used previously, if you guys remember. So if the price was to auction above the value here, the expectation is that you're going to have responsible sellers come in, right? If you get initiation and we start buying up top, this is, initiating activity, and that's not expected, right? You expect selling below initiating. Is this expected or not? Is this number 4 here expected or not?
Yes.
No.
Okay, whoever said yes, next time raise your hand because that's the wrong answer. If you're selling below value, that doesn't make sense. Because what do you want to buy? What do you want to do when something goes below value?
Yeah, but I think once we get out of balance, then those long-term people come into play and that starts happening. So how would we know? I mean,
Well, I'm just asking you, if something goes below value, let's say you're looking for shoes, and they were $500 before and they dropped them to 50, are you going to look to sell more of your inventory at $50? Would a seller do that?
no.
No, the seller would not do that. You would probably snatch up as much inventory as you can, and then you would sell it to, Ashley at the top or above the value. The
Okay.
buying is expected below the value because that's responsive because you're getting buyers to find value. And you raised a good question. So how would you know, right? That's where combo market profile footprints kind of help you determine if there's bid, if there's access low, right? Unfair lows on the bottom. So if they stepped in. If you see that something is going below value and you're not seeing much aggression, right? There's no other time frame participants. They're defending or buying that like below value. And then, there's mechanisms that you can use in terms of, did we peak above value, then we lost it, we go below and we're not able to reclaim that value area low, well, then there's a high chance you're just going to continue with the trend and go lower, right? And we'll get to that. But as long as you guys understand this chart and how you can use it and understand it, especially in bracketed markets. I mean, in bracketed markets, I would say this becomes bread and butter for making money. Okay. So I think we covered this, right? Buyers and sellers agree on price. That's the fair value. And when they disagree on the price, that's an imbalance or price discovery occurs. So any questions so far? We're about 26 minutes in or so on the class. Any questions on market auction? No, very good. All right, volume profile. Instead of most of you guys, when you turned on your trading, whether it was for some of you 2020 and AMC debacle or GME, right? You guys probably, heard, oh man, use volume, right? And volume is, you have the volume that we are using, volume at price, and then you also have volume at the time, which a lot of you guys use the, the vertical volume before maybe. When the volume profile was invented, the idea was to understand how much volume was used at this price, and did the price go above, stay within, where did it break out from that consolidation? And that's how you can use the volume profile. And that's how we mainly use it. We use it to understand where the HVNs are, where are the LVNs, where's that equilibrium, or aka POC, and then we make assessment basically on the information day to day, SVP profiles or weekly profiles, to figure out, or is the value area shifting higher, lower? Are we framing up, down on different time frames? And then we make a decision. But volume profile is at the price level, how much volume did we have? And then we use that information multiple ways to generate how we want to trade. So from components perspective here, I would say this is pretty basic for most, right? The value area high that you have here, this is your extreme high. That's for this day, right, that we are on right now. This is where value was at the highest level, and above this, you're expecting to see what? Initiative buyers or responsive sellers?
Responsive seller.
Yeah, we were expecting to see responsive sellers when the price went above it. They did. They brought it back in, and where they send it back to the value area low. And it seems like they're happy trading between the extremes. The value area high is the extreme high, where 68% of the volume was spent, and that's what I'm denoting here. If you add these two numbers up, you'll get 68. So your value area is, your first standard deviation. Then you have the POC, right? Volume point of control. This is the highest number of contracts were traded at this level. A lot of people like to initiate a lot of trades at POC. On higher time frames, you can. on daily time frames, it becomes a profit-taking level. At least it does for me. You want to be careful initiating too much and too much size here, because if these sellers, when they popped above, were aggressive and more aggressive than what we got on that day, there's a high chance you're going to basically do this like you did here. Right? You're going to slice through it and proceed lower. So that's something to keep in mind when you're trading, especially if it's day profiles that you're looking at. That, you know, a one profile POC like this one might offer a bounce like it did here. To draw there. It might offer a bounce, and that's pretty good, right? You just have to know that you should be taking some profits, especially if you're in a bracket for the day, and it seems like here. But then you see, once we dipped below the value area low, then you got who buying here?
Responsive.
Responsive buyers.
Yeah, you have responsive buyers coming in and saying, "Hey, man, the value, you know, the price of this, whatever that, I guess it's some stock here. Let's say Tesla went below the value and we snatched it up as quickly as we can. And the normal target is that you're going to go back to POC. And finally, the target would be they're going to go to value area high. And most people that bought it at value area low, you're closing some here and you're finally getting out here, especially if you're coming and you go above value, right? That's your you know, sign that you want to be selling. Because if you're looking for advantageous price to sell, what's a better way to sell something than above its value, right? If you're in a market or have a business or whatnot, if you're selling something, you can get more for your money and you know it's not worth that much, you're just going to look to get rid of it as quickly as you can, right? So that's the components and what it means, right? And here's your standard deviations. And when we are in a bracket that's longer, right? What I mean by that, 2+ days or 2+ weeks or whatever time frame you're on, we typically use first standard deviations or sigmas, right? And I have a video in this class of how to draw that, right? And you guys should definitely use that. We're definitely, you know, right now we're in a Q, like basically 3 months bracket in the Q3 value area. So you can look at that, you know, 3-month profile or FVP it from January to March for current. And you'll be able to find the first standard deviation, the second, which is 95, and then the final one at 99%. And usually when you go back to the extremes of these levels, like third or second sigma, you're expecting activity. You're expecting activity because those levels might bring in other time frame participants. And when that happens, right, from the market profile perspective, how I combine it with volume is I look for access. I'm looking to see how aggressive were these people and were they able to close, where were they closing that day, right? They left the access, did they push it back inside the value above the POC of that session? Those are important factors when you're looking for the bottom or the top. And if you go back in time, like right now, you might notice some strange things that happened recently on the top. And now we are looking to see, you know, when you're selling off, you're looking to find what? When we're selling, what are we looking to find?
Where the buyers are to shut off the
Selling, that's correct. So you're looking to sell off the, selling by looking for buyers. And same thing happens when you're going up higher, right? You're looking off to stop the buying, right? By finding some sellers that are willing to take you down. Okay. We covered a bell curve, and here's your high volume nodes and low volume nodes, right? So high volume area nodes is basically where there was value and they agreed on it, right? And when they are retested, they can spark a bounce, right? First line of defense when you explode from HVN or a consolidation area is that you're looking for the low volume node above it, because that means that there was some, irrational, aggressive buyers stepping in or lower, right? Sellers. And you're looking for that LVN to find it, right? Usually when price is broken, especially from a bracketed market, let's use these bellies here. When a price breaks from this level, it takes a lot of power to break this level. So typically the price is not going to spend a lot of time in this first candle that breaks above, right? So you were trying to find where was the aggression initiated. So we know where the price discovery was at the highest point, the highest aggression occurred. And usually when it goes up and it comes back, that becomes a solid level for buyers to defend before the price falls back in the prior zone of balance. Does that make sense?
yes.
Okay. We'll cover it live a little bit. Fixed range. So these are type of volume profiles that we use in TradingView. Fixed range, you got to select the 2 points to trade it. Visible range, I keep this one most of the time on, just because whatever I adjust my chart, it gives me the high, low volume nodes and where I can expect, excuse me, buyers and sellers to show up. Session volume profile, I do my analysis basically day to day. That's where I generate my plans for the day. This is critical that you guys have this and know how to use it. And then PVP, you can adjust this and get creative as you can. Just make sure that it's repeatable, right? If you put some crazy number of days, like 69 days, I'm not sure what you're going to get out of it, right? At least make it divisible by certain number where you can use that again in the future, right? I switched to quarterly yesterday during the day as I had some free time, and I was able to see some interesting information. The quarterly profile is generating versus monthly and weekly. And we'll again, once we get out of this PowerPoint, we'll go back to it and look over all of that information. Standard deviations, like I just explained what they are. And if you guys click on this video here, if you just click play here, you're going to have, 5-minute video on how to draw them and how to play them. So I'm not going to click this for the purpose of time, but if anyone needs it, I don't mind covering this in the live session. It takes, 15, maybe even less, 10 minutes to cover all of this and understand it. But typically, we want to use this on bracketed or balancing markets. And right now, we are in balance in a larger time frame, but not necessarily on a weekly or monthly time frames. Okay. Here's the example and the visual on it. And, when you look at this, you're in a bracket here. You have the highs, you peak above, you have the lows. And then here's your levels and how they played so far. And then here's your example of the sigmas and what it actually means in terms of trading. Usually when the price deviates too much from the mean, there's a reversion to the mean concept that people trade, especially on a stronger bracket like this one was. And you see how well they responded, right, with the excess low. And then I would say you guys know the rest of the history on NQ ever since we went through about 18,000. Okay. Value area tips and tricks. I think this is a really good page for, especially if you're new to volume profile, to print it out or rewrite it in your own understanding and see how it works, right? There are certain things that you should be aware when the market opens from prior day or when you're analyzing how you want to trade, if you're bullish or bear sentiment and what you're generating and what the market is generating and telling you. These are bullet points that I would rely on a lot. And all of these actually apply, I would say, on daily, weekly, or monthly, whatever the time frame trader you are. If you're looking at the monthly time frame, then you're going to take some time before you place trades, and same for weekly. But if you're analyzing monthly, weekly, and using daily to react as a day trader, then all of these would be pretty important for you to understand, right? If the stock is opening above value and then it falls back inside the value there, it's a pretty bear signal, and usually that drives the 80% rule down. When you open below the value and then rallies back inside the value, that's a bullish signal, and that usually triggers 80% to the upside. If the price breaks that value area high or low, that usually is a decent sign that there was some other time frame participants there, because they're the only one usually that can break these levels, right? With the amount of volume and effort. Excuse me, we're looking for that to continue, right? When you're looking at the trend, right, there's multiple ways to assess it. Do you guys recall maybe 6 to 8 weeks? Well, no, maybe 6 weeks back when we did the weekly profile and the monthlies, when we talked about Feb value area, how tight it was at one point, and then we needed it to expand, and it expanded. We went a little bit higher, but then we started overlapping on monthly volume profiles, right? Weeklies were not showing a lot of weakness at that time, but there was, some overlap between the value areas where it's showing a slowdown in the auction. And when there's a slowdown in the auction, just like any auction you might participate in, you need to find a final buyer at that auction, and then you need to look for prices lower to find more buyers. And that's exactly what's happening now, right? We reached the top. There was no interest in new buyers till we find where is the fair value right now, right? Do we go to 4,500? Do we go to 4,000? Where do we go in terms of ES to find the buyers, build value, and then either go higher or lower from there? Markets do not typically go bull to bear. Like it's rare to see that where, you know, we're in a bearish sentiment now, right? On monthly, weekly, daily time frames, but at quarterly right now, you're still in balance. So you just have to understand, you know, who you are, how you're trading, and understanding the levels, so you don't get caught on the opposite side of an institutional trader coming in and, you know, destroying your position multiple times. Let's say that. The red points here, the long-term buyers and sellers, they're usually, you know, waiting for value area highs and lows, whether it's weekly, daily, monthlies, to get in. They're not going to be buying, you know, if they're, let's say, other time frame participant on a monthly profile, they're not going to be participating in your, you know, while you're inside the value area. They have no interest because the price for them is not, you know, advantageous. If it is advantageous there, it's most likely not a long-term participant like I'm talking about monthly. Could be a smaller, shorter time frame participant that's getting in and trying to push the market up. Another, you know, longer time frame are just going to sit on their hands till their limits are filled, until they get the price at those levels, and that's when the price gets the access, right, either top or bottom, because it did not spend a lot of time. It had to fulfill a lot of orders, and price jumps or drops from those levels, right? And you see that if the long-term firm buyers, sellers are participating in a daily session, most likely will disturb the value area. I would say value extensions are caused by other time frame traders taking advantage of market creator opportunity, and usually they're the ones responsible for the break of IB. Okay. Any questions on this slide? Does any of this not make sense? Okay. All right. So this is where it gets a little bit more advanced in terms of openings, right? And it's not very complex. And if it is, I mean, you just have to kind of speak up and we can cover it. But the way market opens in relative to the previous day or week, excuse me, or month, it's very important for a trader because that generates a lot of information about the price, right? And price can only do two things. What is that?
Go up or down?
Okay, anyone else?
Accept it or reject it.
That is correct. Price can only be accepted or rejected, right? I mean, just put yourself, let's say, you know, I say this when the wife sells something on marketplace and you're waiting for somebody to show up to buy it. And let's say my wife, I'm just giving you an example. Let's say she's selling a hair dryer, and she puts that she's selling it for 400, and somebody comes in, they're like, we'll give you 350 at the doors. Well, now the option that my wife has is either to accept that price being offered or reject it. If she accepts that price, what kind of seller is she? Passive or aggressive?
Aggressive.
She would be an aggressive seller, right? And if she accepts it, that means that she's accepting the price to be fair at that level that somebody offered or bid. If she doesn't, that means she's firm on her ask, right? And she's not willing to drop the price. And dependent where we are in terms of the market, right? If somebody came in and is like, no, I will offer you $800 for that hair dryer. Well, if my wife said no, that would be somewhat stupid, right? If the brand new one's 500 and somebody's offering you 800, that's way above the value for this product, and you should look to get rid of it as quickly as you can and close the doors also as quickly as you can. So that's the concept of value, right? Value is formed by a lot of participants. A single transaction can impact value, but usually you need, you know, other time frame participants with volume to shift that value higher or break out of it. So it's important that you understand that at least the key four opening types that I'm showing here, right? Opening outside the previous day, but inside range, outside the range, within PD value area, acceptance, rejection. And once you establish this, and in the morning when we open, I promise if you mark we open within the value, even if you have like a little notepad on the side, and you check mark based on your daily plane, where do we open? What does it mean? And you check mark, it will help you with your bias. So you eliminate. A lot of people suffer when they start trading the day. Do you have a solid plan? You have a really good plan, and everything is going to your plan. But there comes a little devil on your shoulder, and he's like, "Do this. It's opposite. Do this." And especially if you get easily influenced, if you're trading and somebody says, "I'm long here," and you're like, "Man, I'm looking for fucking short." Well, now you're fighting the battle of information that you did not need to inherit. So as long as you understand what you're supposed to do and you start building confidence on your analysis, eventually this will become a profitable endeavor for you because you're not being influenced by somebody else. And I'm pretty sure there's not a person on this call, including myself, where you had a solid plan and then something happens, right? Emotions, and you do the opposite of your plan, and you're like, damn it, only if I would have stuck to my plan would I have done pretty good, right? I would have reached all the levels. Typically, this is because your confidence in yourself is lagging. And second, it could be that you're oversizing on the position, right? Where you're managing risk a little bit too tight and you're overexposed to the market. So fixing those two things will help you understand this and build up the confidence for you to kind of trade on your own and not really depend on whether Shorty said long or short. Oh, Shorty's wrong, I was right. And that's okay, right? It could be that we read or you had more information that I didn't account for, or I had more information that I accounted for. Those are the type of things that you're going to learn as a trader, and especially once you feel that profitability come in month over month, year over year, you're going to realize that things really repeat, and you just have to have your setups that you identify and continue doing them. And I don't know how many of you traded more than 10, 15 years, but it does, the experience, intuition comes in and plays a role on top of what you've established. If you built a good foundation of the house, you can build on that foundation. But if your foundation is shaky, how you built it, if you don't know if you can add another floor to it, and you're regretting doing that, or not really confident to move forward, then you have to visit your foundation, right? Not saying that volume profile, market profile, footprints, order flow is the only way to go, but when the market is so dynamic, when it's centralized as it is, and then you have high frequency traders, algorithms coming in, your job is to get a piece of the pie. You're never going to get the whole pie. And as long as you can make a living out of this and not be dependent on somebody else, whether it's a company or whatever, right? You're doing the right things, and your confidence naturally will go higher and higher and higher. And then hopefully you can teach somebody else the skill, whether it's your family, friends, or acquaintances, and you basically pass on the knowledge and the teachings to help the people out. So with that being said, opening within PD value or acceptance, right? And this is, a disclaimer. You don't only look at a daily session, you want to look at the overall. Are you opening within the value? Where's the value area high from prior week, month? Those things come into play, but I'm isolating this in the concepts of just the value, right? Prior day value acceptance. If the market opens within the previous day value, right? And let's say the 1 hour balance we don't exploit outside of the value area, well, high chances that we'll most likely have a range day. And how would you guys play this? If you're accepting the value, we dip slightly below the value, what would you do?
Buy the bottom, short the top.
That's exactly it, right? Especially if you see that they're, being fairly aggressive on the bottom. If you see the bid, if you see, on the footprints, you see a large bid coming in, or at the top, you see the large ask coming on the right? It's giving you ideas that we might range, and that you buy the bottom, sell the tops. Okay. This is how that would look like, right? You open within the previous day value area, which is right here, right? So if you open within this area, you're saying, I am accepting the price here. I am happy trading here. And this usually, like we started this class, creates a HVN, high volume node, because while you're trading here, volume is being, traded, right? There's a lot of volume, and then volume here, and then eventually once you break out of it, now you're looking, are you retesting here for a buying opportunity? You look for some imbalances or LVNs, and then if you go below, you're looking for rejections, right? As an intraday trader, you guys should not be married to a sentiment too much, meaning I'm a bear or I'm a bull. You adapt to the based on the information the market's releasing to you, right? And a lot of people that I see, right, when they're trading now, even on Twitter or whatnot, is that they want to be right. Where's the top? Like, oh, I called the top, or I called the bottom, and I'm great. It's one thing to call the top and the bottom, and then it's another thing to actually execute the trade at the top or the bottom, right? And that's where, the hardest part is actually pulling the trigger. A lot of times when, people are scared, right? And, this is a psychological piece. Maybe they lost money in a similar setup before, but maybe their management of the risk was not, ideal. So there's different components that you have when you're trading and you make trades, but the only way you'll know is if you document what you did, how you did it wrong or right, and then, train your brain to find more of these that are right versus wrong. So that way, let's say you're not buying a breakout here when you see the access highs being developed, and then we go opposite direction. You're like, man, I should have shorted it. That was my plan. I went long. You pull the wrong triggers, and then you have to accept the consequences, right? If you're doing something in trading, you're the only one that's responsible. You're the responsible party that clicked the button. Nobody that I've seen can click the buttons for you. So understanding this should drive to that trigger, not being as loose and triggering every second, but rather being more specific and more picky on the trades that you elect. Okay. Opening within PD, price open with the value area, had a quick drop outside the value area, right? So if you go here, I'm trying to find this damn thing. If you go here, open, it goes open within, and then it dropped below, and then you see, right, these tails would indicate there's other time frame participants coming in, and then they drove the price here. They came back even for the POC retest of prior day, and look what happens. Sorry, these lines are not as straight as they can be, but you see anytime you went above this value here, price went back, and then immediately went back every time to the current POC, or you could even use this node from prior day, which would probably be more relevant in trading. Okay. Any questions on the first one? Opening within acceptance. It means that you're accepting the price where the value is currently. Anyone confused? Okay. I just love it when you guys are quiet. It tells me I'm doing a great job. When you open within the value and you have a rejection, if market opens within PD value and within 1 hour balance, they exploit, let's say, lower or higher. That means the value area of the prior day that you had is being rejected, and it's no longer deemed as what?
Accepted. Fair
price or accepted, correct. So when you're getting out of there, they're looking for price to find that equilibrium. They're looking for the next value, right? When you have the breakouts, for instance, if this is our value area, where's your risk reward? Where's your best risk and best reward? Let's say here, this is our value area high. If I'm a bull, if I want to buy this, let's say not a bull, if I want to buy this, where's my best RR to buy in this bracket right here?
At the bottom.
At the bottom or below the bottom, right? Especially if it goes below the bottom and it reclaims the bottom, this becomes your opportunity to buy, right? And the same is true if you're a seller, right? You're looking to sell above or at the extreme of the value area highs. But is the risk higher or lower in balance versus trending markets? And reward. Which one has a better risk reward?
Trending.
Yeah, trending markets are typically, because they're more unpredictable, because they're doing a price discovery, and they can keep doing price discovery higher till they find what?
Sellers.
Until they find sellers, yeah. So until they find sellers or they accept the price or reject the price at those levels, your risk to reward is much higher in a trend as long as you're going with the trend direction. If you're fighting that trend, you might learn a quick lesson on capital blow up. Okay, so we covered this opening within PD value and then you have a rejection. So similar like this example here, right? You see we had the value area high and low. When they went there, they rejected it right pre-market and then they came back. And you see here, they came back to the low and they basically, something happened where the market and the auction generated this and cracked this range high here, but they bought it pretty aggressively on the bottom here, right? And then the price continued much higher. Okay.
Where would you even get in on that? Because it seems to happen like way too fast.
So that's a very good question. So when you look at this, if this is my previous day value area, which is, let me go back. And so if this is my previous day value area, which is sitting right here, I'm trying to draw these as quickly and you see here, well, when we went above it, we didn't like it, right? When you see the volume here is pretty low. And then when we cracked the POC, we bounced initially, then they had a crack, but look at the value area here. Value area low came back and they tapped once and they bought it fairly aggressive. Then they did it again. You're looking to buy something at value, at the bottom of the value or below the value, especially when they give you a first indication, right, that they're going to be aggressive at that level. So if this is the case, right, the way, I don't even know what this is in terms of to go back in time, but you want to buy at the bottom, especially if you're opening within value and then you test the bottom of it. That's usually a good level to buy. So let's say tomorrow, I'm not sure where we closed, I haven't looked at it. But let's say tomorrow we open above and then we dip to the value. This is not a bad risk to reward to buy this. In the bracketed markets, your highest reward is where? Because this would indicate a bracket being formed and happiness, people trading. Where's your best reward to buy this?
At the top of the value?
Right here?
I don't know where you're pointing at.
I was pointing right here. You're saying the best value is to buy at the top?
The best value is to buy at the bottom, and the best place to take profit when you're in a bracketed market would be at the top of the value.
Exactly. So if you're looking at this, you open within and they drop it to the bottom, right? This is your best RR right here. And if you buy it at the POC, your RR gets usually cut in half. Because if this is your initiation of the long, you're looking to get out here. So your risk increases and your reward reduces as you're trading in the middle of it. So your best opportunity is to buy at the bottom, especially if you see that we're opening within the value area. Does that make sense?
Yeah, thanks.
Okay, and this is how that would look, right? Open it within, but you reject it. So that means you're rejecting the value area low here, and you believe the price should be higher. If you're opening within, right, value area, and let's say you come to the bottom here and you see that there's buyers coming in, honestly, it's not a bad idea, especially if you see that, let's say the POC was right here, and we are opening above the POC, and then you see them struggling to break it, and they break it here. These spots usually on the brackets become very good for buying, in my opinion. And the more comfortable you get playing this, but as long as you understand other time frame participants, like whether if the weekly low, let's say weekly value area low is also here, right below this, you get a little bit more confluences to look for buyers and look for traps, right? Maybe they dip below, come back, and then go. Depending on where the other levels are, you can formulate how you want to play it. But usually, I avoid as much as I can to buy something at the tops of whether it's session value high or previous day value area high. I avoid buying here. I'm looking to see, especially if you're looking to trend up, if it's trending up, I'm looking to get a better price, better fill at cheaper prices. Maybe that's a POC, depending on how aggressive they are, or maybe that's the value area low to drive higher. Okay. Opening outside the VA, but within the range. We are in balance, but this is not within that 68%. It's leaning a little bit more bullish, right? Versus bearish, right? So when you're opening above the previous day value area high, what does that tell you about the value area that you are out above? What does it tell you about this value here?
We're rejecting that value area.
We're rejecting this value area and we're looking for, higher, as long as this previous day high gets cracked, and then you're looking for continuation where institutional traders are giving you opportunity to go higher and you're looking to join them, right? If you're trading this and we open between previous day high and PD value area high, and then you crack below, there's a high chance you can execute the 80% rule here as well. Right, so that's something to keep an eye on. And then same is true for opening on the bottom of this, reclaiming value area high, 80% rule to the upside is doable. But if you crack below the PDL, then you're looking for a continuation down, because especially, if you see that they're not able to crack this PD value area high low and they crack inside and they lose it, that's usually a really bearish sign. And just like I explained in one of these slides, this is important that you guys look at this. You open above value and then you lose it. Those are good indications of the auction changing behavior. And you guys should be aware of those as they happen, right? Because you should be able to mark those levels and look at them as the price is auctioning in between or below and above. Okay, any questions so far? And this one can lead to a much higher risk reward, right? Because you can catch some nice moves, but if it stays in this range for a long period of time, let's say the morning session, we stay in here and we don't crack the top or the bottom, typically you have a violent move in the afternoons. At least that's what I've noticed out of this, right? It most likely would lead to tight value area, but those occurrences when you open above value area and below the, the range, or here on the bear side, usually we don't spend a lot of time consolidating because somebody has market information or news that's, telling them reject the value, we're going to go higher or lower, right? So typically I would say out of here, you expect to see some trend days or traverse of the opening to the lower value or higher value if you're on a bearish open. Okay, opening outside of range. So typically if the market, let's say gaps up, that's bullish as long as we don't fill that gap and we don't fall back inside the previous day range or value. Because that means that let's say the gap up and the value higher is rejected, then they're going to search the value much lower. And the same is true for the bearish, gap downs. You gap down and then let's say you reclaim that gap and then you can create a short cover rally and explode much higher, right? If it does open outside the range, your PDH and PDL become key levels to keep an eye on. At least it's done a great job lately because we've had a lot of gaps on the trend up, and you're able to see here, right? If you open above here, you don't want them to lose that range, right? Because then you have the value area high, and these would be the targets that you're targeting, POC somewhere in between. Okay, so this is the last one of the 4 types. Any questions on the opening types? All right, time check 11:40. So I think any questions so far, guys? Anyone? Okay. All right, I'm gonna cover these shapes, and then they're pretty self-explanatory, but just so people understand how and why they're used, right? So if you think about P-shaped volume profile, usually they're triggered by short cover rallies, and you want to see this in the uptrending markets, right? As you're going higher, you want to see them spending less time on the bottom of it and less volume on the bottom of it, because the price goes higher and their market orders of buy are driving the price higher. Then you want to see them consolidating, and then the next day you want to see them break the high and continue in the direction that it's going, right? If you get a P shape, right, on the bottom, right, so you have B shapes, B shapes, B shapes, and then all of a sudden you get a P shape, Usually this is a short cover rally start, and then, we can go higher, right? And you're looking for a profile to be developed out of this as a D shape. So that would indicate that there's a slowdown of the short cover rally. We found equilibrium, we found value here, and then usually slows down on this concept here. Okay. If you do have a P shape, right, that's in a bullish trend market, you can play HVNs, right? Usually they work out pretty well. On a P-shaped profile like this one, you will also have some LVNs where the trends indicated or started, right? So if you look at, for instance, this one here, this would be an LVN. If the price was to come back, this is where they started, the aggression. So if you look at this and you pay attention to how we are arriving there and then what happens on the footprints, sometimes these are not bad levels to initiate some longs, especially on higher time frame profiles, whether it's weekly, monthlies. These LVNs can play a pretty decent role along with the HVNs. This is your first level. If that cracks, you get stopped, then there's a chance you can get this. But understanding the market, are you higher highs or is this a consolidating market, plays a role in the shape and what it means, right? The opposite one of P shape would be the B shape profile. That means the longs got, liquidated, we sold off. And usually in the bearish markets, you're looking to see the Bs, maybe some D shape profiles. As soon as you see a P shape, you have to be somewhat careful that we might short cover rally out of this higher. Doesn't mean you're going to traverse the whole thing, but it means that the trend might be stopping, coming to an end. If you see a B shape when you're going higher, and let's say you're going higher this way, and then you see a B shape, what does that mean to you guys?
Right. We're slowing down on the trend and could reverse.
Yeah, there's a high chance because this little tail on a B shape, right, like this would indicate that there was no value, no volume built here, and they pushed the price down, and now they're consolidating with HVN here. So if we sell off from here, and then you find this POC here, there's a high chance they bring it back to the POC, and this becomes a really good shorting opportunity in terms of the shapes. Okay. Pay attention to this as a rule of thumb. If the price closes above the 50% on fibs, on a B shape, be wary the trend continuation would be more debatable the next day. So if you have a B shape and you take your fib here, let's say to here, and it's somewhere here, and we close above this for the day, right? There's a high chance that this trend down might, or up, whatever that case is, might not continue. So
The over 50% rule for fibs, right?
yeah. Mm-hmm.
Gotcha.
B-shaped. So these, in terms of confidence and how these are traded, these are, important to understand, right? The B-shaped profile occurs when you have, one consolidation, then you say, oh man, we don't agree. And then you go to the bottom and let's say you start building value here and you're like, okay, well, the fair price should be higher. You start auctioning back and you're playing ping pong, right? Typically when you break the range of a double distribution profile like this one, if you break it to the upside, you have to be really careful that you're not caught on the wrong side of this trade where, if you're shorting the top here, once we break this HVN, you learn a really good lesson not to do that. And the same is true on the bottom, right? Let's say from this zone, we break low and people start buying the dips. You're going to learn a lesson that, these B-shaped profiles, when you have a double distribution up, those are pretty violent, right? And they can, they can have a lot of power behind it, right? They accumulate it twice, then you will have some short cover rallying, people coming in and buying it, and as well as new buyers initiating. So it becomes really, really dangerous if you're caught on the wrong side of a double trend distribution day. And confidence on these type of days, if they break out of the zone or the range high, low, becomes medium to high, in opposed to the P shape where you did not find any value on the bottom, right? So if you're thinking about P shapes, you find no value here. On B shapes, you found value here and you found value here, and then you're looking to see the confidence of the auction. Is it going higher? Are you rejecting prices lower? Or, from here, are you going higher? So it's kind of like a ping pong until it's not. And if you have the proper risk management, you can make money on these as you're reading the game or the chart and price action. If you're buying the bottom here, right, and you see a bounce and reclaim of a level, then you can go along and look for HVNs on the top. Or if you see a large imbalance candles that came down, you can find where that imbalance is for profit taking. So, okay. Any questions so far? Okay, so let me go into the charts, right? I'm gonna stop here, the sharing of the, we'll discard that, and then we'll proceed to look at the charts and go from there. Let me just bring up the charts here, and then we'll start. Basically, I will explain how I use volume profile and how do you trade it, right? So I will start from the beginning here, and I will show you guys what I'm actually using. Is there anyone that doesn't know how to find these indicators? Let's just say for the purposes that, let's say, assume that nobody knew how. If you go under indicators and you go under technicals, and then you'll have a sub menu here, and you want to go to the profile section. Once you click on that, there's the different types, and I covered, the four main ones that we use, which is fixed range volume profile, PVP, which is basically periodic, which you're setting the period you want to be on, weekly, monthly, quarterly, yearly, right? And then session volume profile is just your daily session that you're using, and that's your day-to-day volume profile. And then visible range profile is the one that sticks on the right or left, depending on how you set it up. But it stays there, and whatever is on the screen, that's what you're going to see. So with that being said, I'm going to show you what I have set up here, and basically
我还把暖气打开了，
I'm going to
还是觉
set
得
up.
家里有点冷。
Okay, somebody has to go on mute. So now what I did, I selected, I already have some of these preloaded. So when you go on a PVP, that's one of the indicators I clicked. You have the period that you can change here. I can change it to 1 month. Now you're going to see 1 month profiles, right? And I typically use daily or 4 hours on the profiles, and the volume I use ETH, right? So now if you guys look here, on monthly profiles where we are at a big zone. I will not dig into it because I really want to start, whether it's on a yearly or quarterly, but I prefer now to start on quarterly because we just finished the 3rd month, and we're about to finish the 4th one, and it would give you enough information to look at the quarterly profile. So now let's just start analyzing the data and what the market's telling us about the quarterly profile. So if you go back on the daily, and let's just say you zoom out a little bit and then you adjust your chart, you see that, from, let's say, where's October, November. So you see the market consolidated here for some time, right? There was a decent bracket that was set up here. And that looks to be 1, 2, 3, 4, 5. I'm sorry, 5 quarters right here. Let me make sure I'm on quarterly. Yep. So, 5, there's 15 months of consolidation that happened here. And then eventually they exploded higher out of this consolidation. This is, then we had a quarter, 2 quarters above the value here, and then this one was imbalanced to the upside, and the value stayed below here, and here's your current quarter, right? So right now, recently what happened in the market is that we went above the quarterly high, and I usually mark these on a level, and I would put quarterly value area high, right? I don't mark these levels just to have the level, and I can say, hey, this is quarterly value area high. What do you guys think I get out of this level? When I have it on my chart, why do you guys think it's there? Why do you think I have this on my levels right here?
It's a key level and you're expecting reactions there.
Yep. And in terms of price and acceptance rejection, there's a reason, right? Because if we're below, like we went above, right? As you guys see that we accumulated right inside the value right here. We popped higher, right? And then they said, okay, well, maybe there's not enough value here. And what did they do here with the nice candle? They popped inside of it, and they spent quite a bit of time inside the value here, right? They consolidated here inside the value, and then they auctioned lower, right? And you see that there are some bounces. If you guys look at these LVNs, right? So there's an LVN that was sitting right here, right? And then you see here, when we came to it, like 51.70 level, they came back and they said, okay, well, there's some aggressive buyers here. So now just think about psychologically. This is our first level, critical level of support right here that I highlighted. They came back here and they broke the first level of support, right? The next level of support where they were happy trading would have been here. They were happy trading in this area, right? And you see here that there's a lot of choppiness, but not a lot of time spent this time compared to when we're auctioning higher, right? So if you paid attention, we spent some quality time here in this section. And what did they do to that section when they were going down?
Just blew right through it.
Just blew right through it, right? So if it, now think about price acceptance and what are they telling you? If they blew through a level that they spent a lot of time before, and now they just cracked through it, what does that tell you? What does it tell you about the aggression?
Super
Go
aggressive.
down.
They're fairly aggressive to this, to the downside, because if this was fair price before, they're no longer deem it as fair. They're looking for lower prices. So now when you keep going, right, there was a little HVN that was, I'm sorry, LVN that was sitting in here about 5,000. And we had this level actually, and that's where we closed Friday, right at it. We had this level marked and they were dancing on this for a bit. Then you look below, remember, and you're looking to see what about the participants that were, from the high volume nodes, right? And if you mess with the, time frames here and whatnot, that POC can shift from here to here. I'm keeping this level. You guys are welcome to play around and shift it, but I typically on quarterlies, you can use the daily candles for the volume profile, and that's what I'm doing, right or wrong. So they bounced off of this HVN, and they do have a nice quarterly VPOG that's sitting right here at 49.13. So let's say they're not able to hold 49.60 come tomorrow, right? If they lose this low here, there's a high chance that you're going to be auctioning to 49.13. But is there anything you guys should look at before we arrive to the fair price?
The volume?
What level should you pay attention now that I explained LVN, HVNs? So your high volume node here said, sure, yeah, we found some buyers that were sitting there. If they crack that level, then you have the one that initiated from the LVN, the aggression was sitting kind of right here. So you have that 49.37 level, which also happens to be a fairly important level in terms of, where we consolidated. Previous high was kind of here, right? You had the previous high, you rejected it, you came back and you bounced. So this level becomes somewhat important, right? About 49, 43 to 33. Then ultimately you're arriving at the fair price of a quarterly. And this is a big, big, big level. I would expect, like I mentioned, on daily POCs, you don't necessarily will get fireworks, but when you have a quarterly VPOG that's sitting there, there's a high chance that there will be the magnet that they want the price to kind of auction to see, are the participants still there? Are the buyers that initiate these, which was once deemed POC and fair price, is it still fair price?
You could also see on that, is this daily? What time frame is this? Daily?
Yeah.
You could just see too on that day. We never really went back and revisited that. Maybe less some buyers that didn't get their orders filled on that day. When we first.
Or
No. Back there. Yeah, right there.
Yeah.
Because it was such a violent move from there up, and then we never really came back.
Yep. And this becomes a very good zone for potential
long.
Yeah. Ideally, I want you to think before you answer. Don't just answer. What is the ideal scenario you guys want to see here to swing? When I say swing, let's say we want to buy SPY calls. Where's your spot?
I'd wait for price to come up, come back to about 5,000, find acceptance, and then take it long to about 5,100, 5,150.
Okay, so what you're saying is that you would wait for the price to find acceptance here, and then you would swing long. Is that correct?
Correct.
All right.
But
Anyone
I would also be aware of that 5120 level.
5120. Okay. Yep. Fair enough.
Kind of like where that last volume node was at.
Okay.
Before we
Anyone
jumped.
have a different idea where you would buy this for a swing? This is one option that Dirty brought up.
I will wait for the VPOC bounce and see if it holds and go for a long.
Okay, so he is suggesting that he would go here. That would be option 2, that he would wait to see to go long here. Okay. Anyone else?
Quarterly
I second that.
value very low.
If you're really patient and you want to get the most for your buck, where's your entry?
48.67.
Yeah, I mean, you want to wait somewhere around here. So if you're a swing trader, wasn't this the consolidation that we had? Right here? Do you guys agree, or is this a box that we consolidated? Is this the LVN that's sitting right here? There's no volume here. Is this an LVN right here?
It's a nice little gap, skinny belly.
Skinny belly, and this is a swing low at some point right here, right now. So, and this one does not have a lot of access. Does this one have a lot of access if you're to go on market profile and get this guy? Does it look like it has a lot of access low here?
No, negative.
Negative. What Dino tracks, and I also look at these, there was a nice little imbalance between the candles here, right here. And you see that they came back and they filled that void on that between the candles, right? There's just a wick, there's no bodies overlap. So now what they could do, and where my entry would be for potential longs, and when I say long swings, doesn't mean I'm bullish, we're going to the moon. I would manage my position if they're to do something like this, right? If they're to go below the quarterly and do this, this is my sign. They would sweep this low. They would get people excited. This would be a really nice acceptance of this breakout. I mean, did we just not cover this first slide right here? All right, let's see. Doesn't that mean acceptance? You break above a range, you come back and you're looking for prices higher, right? So if that's the case, this consolidation that you had would be a nice one. If they crack this value area low and you see the volume confirms that and it's aggressive, right? They break this value area high of this, then ultimately they would most likely target 4702. Am I wrong? Following so far?
Yeah, that's kind of why I would prefer to be above than below. If they're
Yeah.
trending down, it's like
Well, they're not trending down on the, when you look at the
bigger time frame. No, still haven't made a lower low.
We're not too far, guys, from all-time highs, right? This is where a lot of, you're down 6-7%, right? It's not a big deal considering everything that's happening in the economy. But let's say they crack this level, you have to be aware of this monster level right here. This level here can cause some serious pain to the shorts. If you're still shorting and you miss these shorts and you start initiating shorts here, I would pray for you because there's going to be a lot of you bears that are late to the party that you get destroyed. There's a value area high of quarterly, value area high, POC. So if you're to use an FVP profile, right? Let's say from here to here, this is a pretty big volume node here, guys. You see it right here. And especially when you're coming on top of it and you haven't revisited this yet, right? We've gone up, and now if you come back to this level here, this would be potentially a very good swing low if you can hold quarterly value area low. If you crack below and you regain it, that's my long entry for, for swing, let's say SPY, SPX, whatever you trade. That would be a good spot to take it based on the volume profile, right? Sweep some people, get them excited, because who are you expecting to show up here below this quarterly value? That's 3 months of data. Who do you expect to show up?
Responsive bias.
Yeah, we want to see the responsive buyers step in, right? And that's what we would aim for, is to hop in with them. And how would we know if that low is valid? It's not volume profile answer. So just Think outside the box and what you've learned maybe before. How would you know that low is pretty good or not?
Well, failed auctions or poor low on the TPO.
Okay. So if you want to go long, what do you want to see on the bottom?
A completed auction.
Okay, good. What else?
Where completed.
An inflated ask.
Say it again.
Single print.
Inflated ask.
Single prints.
Single prints. You want to see a buying tail. You want to see some access where when they come to a level that they left, let's say I'm throwing periods out. H period has a lot of single prints. Let's say 10 TPOs single here, and then you come back here, and that becomes a really, really good long. So you want to use, that's why you combine market profile with volume. You want to understand when the other time frame participants are entering, and the only piece of information that they leave behind is your single prints, right? So when you have a low or a high, right, you want to make sure that you're seeing single prints showing up, right? If it's a poor high or poor low, like we have here, I mentioned it earlier. Is this an access high here?
No.
So let's take a look at it. I'm just gonna switch to RTH for a moment, and then we'll go here, and let's see. So here's your TPO. Is there a lot of access here?
No.
Anyone else? What do you guys see? I'll give you 2 months so you can see it. So when you see a top, is this the type of top you want to see if you want to go much lower?
Yeah.
This is the top you want to see, the poor high?
No.
I want you guys to think a little bit. So if this is my high here that left basically 2 TPOs at the top for 2 months, and I'll try to go lower TPO tick size. This means what? Has the auction finished properly here or not?
No.
No, guys, that when you see a high or a low, and you're looking for a potential, like a decision the market is generating to you want to see an access at the top. You want to know that you found a lot of sellers and they're able to push the price down fast. The same thing is true when you're looking for buyers. You want to find, a level where you found a lot of buyers. So let's say in this case right here, this was the LVN that we are in. Right now, if you look at this, do we have a lot of buyers right here with the access on the bottom? Oh, let me give you a weekly profile on the bottom. I'm interested to see what happened here. Is this the access low that we need to see? Am I
Looks
confused?
better.
You guys are not, either you're not following or you're afraid to speak. What should I see here right now?
Single prints, since it would represent that they weren't there for that long, so they bought it up.
Yeah, you want to see some single prints here, and that's exactly what we didn't see. So now when you go on this TPO, right, I have volume and TPO, and you see on volume, usually if you don't spend a lot of time there, are you going to spend a lot of volume there?
No.
Usually they're in sync, right? Meaning no. So now when you look at this, what I highlighted, right, and look at the TPO, literally giving you to a penny here where you should be looking for the buyers to show up. And look at the level right now. So if you're not able to, let's say, hold this level tomorrow, there's a high chance you probably go all the way here at 49.76 level. And then ultimately you know, crack below that level. You have some shitty support here, but ultimately you're going to go to 49.33 and then all the way down to 49.13 level, 14. And then you have some LVN, you will look for opportunity there, but ultimately a long swing call based on quarterlies would be that they dip here and do this. And then you would use these as targets, right? For your longs. Does that make sense on quarterly and how, what we explained so far? Does it add up to you guys or no?
Makes sense.
Is
It
there
does now.
Okay, good. So that's our quarterlies. I'm just gonna hide some stuff so it doesn't give me these weird lines. Okay, so that's our quarterly levels. You guys should be well aware of this, right? Is there a chance? I'm not sure what the news were over the weekend. I haven't really paid attention. I know we approved a lot of cash for other countries, but in terms of war, is there a high chance that we might bounce here? Yeah, there's a little bit of chance here because, like I said, if you play with this, right, when you look at this volume profile on the quarterly here, and you mark this, you know, shelf here. Let me see, where is it? It's like right here. There's a case that you might have the quarterly POC in that range as well. So if that's the case, we might have a little bit of a bounce. So it's important to see how we're going to do on lower time frames. So far, this is the quarterly. The next step I want to do is I want to check the monthly profile and see, you know, are we above, below, how are we doing, right? So we're on ETH. We're going to look at the monthly profiles. And, you know, if you want to look at an isolation of everything, here it goes. So we had the March value, right? We built this. I remember this because I remember looking at the monthly profiles when the value area high was super tight on February. And we said that there was not a lot of participation from institutional traders on this one. They went above, they cracked above the March, then they cracked inside the March. And here we are. We went to the March value area low. We cracked the February value area high here. We tried to hold it. And now you see the POC on February is sitting at 49.74. So if I was to mark this level, I would definitely have this level here marked up as Feb POC. It's no longer BPOC because we just tapped it. And that becomes, if you look at it, becomes a pretty decent level for a bounce. So you have the 49.64, I believe it was, if I'm not mistaken, where was the value area low here? No, that was the January value area high, correct? So there was a lot of levels I recall on this. There's a lot of support here, just like we have below on the quarterlies. So,
Yeah, that was just the quarterly, wasn't it? For the
yeah.
low.
So here, this is your, you know, January value area high. And I posted this chart in Discord multiple times that there's a lot of support here, guys. This becomes a really, really important zone for the bulls to defend. You have a January, you have the quarterly, and then you have the Feb POC all sitting here. So it's not a level where you want to be initiating a lot of shorts, right? If you're initiating a lot of shorts, what are you doing in terms of, how do I frame this question? If you're buying somewhere where there was a lot of buyers before and you're looking to short there now, are you being responsive or initiative?
Initiative.
Yeah, you're being initiative because you're aiming for the price discovery to do what?
Continue down.
You're down. And based on the class that we had, which one is expected behavior, responsive or initiative?
Responsive.
Responsive.
Responsive is expected, initiative is not. So you're playing against the rules of the type of buyers and participants we have in the market. So right off the bat, you're playing the odds against you. Okay. Did I swing calls on Friday? Yes. Is there a chance that I can lose $300 on that swing? Yes. Is there a chance that $300 can convert to, let's say, $1,500? Also, the answer is yes, but I'm willing to accept that, the $300. Somebody has a mic that keeps waking up, guys. I don't know who that is. But that's the gamble, not necessarily a gamble, but based on what I'm seeing here, this range here that you're seeing right here, it is very, very, very important level. Go back to the notes in Discord. I don't know how to find it myself, but in the chat, I showed you only these 4 levels or 3 levels plus another one. I had identified this as a key zone that we have to hold. Does anyone recall that? If not, I'll find it somehow on the Discord.
It's in Shorty's corner.
Oh, okay. Well, maybe there would be quick.
I think that's what you're talking about.
I believe so. Yeah. Let's see. Where is it? 5063. Yep, that one. I'm trying to find the one that I posted only the month. So either way, I'll find it. I'll post it. But this is a very, very big level because everything that we covered now, you think about January. If you crack this January value area high, there's a high indication. Then if you look at the price action of what we've had so far, if this is our yearly low, current year low sitting right here, what are the chances that we hit this then, right? If this is our January profile right here, you crack below that high, well, most likely you're going to be headed, towards the POC, which happens to be sitting right where the quarterly POC is, 49.15. You can draw a nice little zone around it. You lose that, then, you're off to the races. And you look at this on the bottom, here's your value, the LVN is sitting right here. You crack this, then you're targeting yearly lows here at 4,700 and some change. So you're playing the values and you're trying to understand. The question I always ask based on this, how can they deliver the most pain? How can they fuck up the most people and catch them on the wrong side? Well, now you think about it. If you didn't like shorting below 52.46, which happened to be March value area high, I think Sunny, when we were trading live one time, we were somewhere around here. And I said, I'm just not ready to swing shorts already yet because we are holding a level, which was the March. And I said, once we crack that level, there's a high chance that, the puts would work. Obviously that happened, right? And they're not respecting much of March value area low, but they did come to that level. Do you guys remember 1594 multiple times? I think like 3 days in a row. They came back to 94 and then they rejected it, right? So they're continuously saying, no, the value is lower. The value is lower. So once they're able to crack and breach this range right here, which is your March value area low and the February value area high, look what happens. The concept of going back to the opposite side of that is pretty real, right? You went, above value area high, you cracked inside, you came back to the POC. So now do you guys see why I highlighted this zone here, 49.74 to 35? Does everybody see it?
Yeah.
It's a very important zone, guys. It's super duper important because you have a lot of overlapping key levels. You have like a Feb POC, January value area high, February value area low sitting at 37-ish or so, and then you have a January POC. So this range here becomes so trappy. It becomes super trap, and it's actually probably worse than this level here for traps. So here they have to hold this, and if they don't, I think the year for S&P could be, from positive or whatever, the 4,700 to 53 to the negative, and being a down year. So this level here is probably going to decide how the, potentially next 2 quarters go, in my opinion. If they hold this, I would say there's a high chance we go all the way to this 52, 70, 80 level range, as long as we break the 94 and then ultimately all-time high. If they can't hold this level, then it's trouble. Okay. So monthly framing down, meaning we broke the low, which was 64, right? You guys recall that level? So the framing stopped here at, I believe it was 63 and a quarter, if I remember the levels. Yeah, that was 63. So this is where the framing stopped on the monthly. So this is where we started. And now if they want to get back above this, this would be a really good start, because what would that do in terms of monthly? if you're able to close this month above, let's say 63, ideally above 94, what would that do to you? What would that tell you? If you're able to close above 94, what would the market be telling you? Please get this right, guys.
Above 94 would be bullish.
But what is it telling you in terms of price, value, acceptance, rejections? Put the whole picture
We're
together.
rejecting price lower.
We are rejecting the value from February that we built. And if you reclaim that 94, there's a high chance that you're creating prices and accepting prices higher within a 2-month bracket. Wouldn't that be the 2-month bracket then that we're accepting right here? Because if they do
Yeah.
this, right, if they're doing this and they crack below and they reclaim this level, a lot of people will scream this market's rigged. Because I promised you, this is not off the table.
That's what I was talking about in the beginning.
Yeah, if they can reclaim this,
That's
this,
ideally what I was looking at because you'd get a higher. Well, you get almost 300 points.
yeah. And I brought it up here just to kind of explain it on what you're seeing. I didn't discount what you're saying. All I said is that we would want to, you know, if a swing low is broken on a quarterly, I would much rather buy a swing here low than here right now where we are at. Does that make sense? Right here is not a swing low entry.
Right at the moment, no. That's why I said wait,
Yeah.
but
If they reclaim this, man,
both
a lot of
scenarios
people
happen.
are going
We
to
just gotta
be
wait and see.
a lot of people are going to be fading this move and shorting. But if they reclaim this nicely, let's say above 94, ooh, 5180 happens, I would say, fairly quickly. Like this little range here would happen, I would say, you know, a day or day.
Path of least resistance is at this point up.
Yep. And I think a lot of bears are, you know, late bears might be stepping in here, and the late bears usually get punished. Okay. Or late bulls. Either way. As long as you're late, you get punished.
As long as you're late. Oh man.
Okay, so now I gotta figure out how to delete this. Okay, so far, are you guys following how I'm using volume profiles? I'm dissecting where's the price, where did price go? Did the price get rejected from March to April? It got rejected, went to the value area low, executed 80%. Now inside February, they're finding some value, right? They bounced off the POC so far. You know, they haven't visited the low yet at 36, but this zone, if it gets revisited, might be pretty good, right? And then below that, right, if you look at it, December value area high, January value area low, has a decent overlap in terms where you would have a lot of participation, right? And then below that, you see that there's some serious consolidation here. 1, 2, 3, 4, 5, 6 months of a bracket that we were in. So if you're a, you know, let's say a long-term bull, that 46.34 level right here, you don't want to break this. And I really mean this. If you break this 46.34 level, things can go really sideways and really visit the bottom of this 3,400 level here, or 3,500 of October lows.
That'd be nice.
That would be really high odds scenario. Would there be some chop in between this, like right here? Yeah, you know, they could find some buyers here on this previous breakout, but if they dip here, you know, you're looking at something like this. But intraday short term, this is the level that we just talked about moments ago that they have to kind of cover and see what they do. Because now they have to deliver pain to some level to the bears. And the best way to deliver pain is to cause a spike from here. They held a key support here, right? They held this level 49.64, January, February POC area. They held this level. They reclaimed the first LVN here. Typically, when you're looking for a reversal of something, is if they can hold a first level of support, a key one, and then they reclaim the next level up. Just think about logically, is that a potential sign of a reversal or a slowdown in the auction on the bear side?
It is. I've seen it on lower time frames a lot.
Yeah, I mean, it happens a lot, guys. And on this time frame, there's a high chance that we can, you know, we could potentially go all the way to fit 63 and this area here on the higher time frames that we found. So I would definitely watch this for now. And then the last two steps, I want to do is I want to look at the weekly, right? Once I go to weekly, I use typically 65 minutes. And once that populates, I want to know, are we framing up or down, right? And the same thing that we just did. Remember, we consolidated, we had this 2-week balance here, right? Where we consolidated, we cracked inside, and you quickly came all the way to the bottom of this 51.57 area, and you basically did not like it. Once you cracked this level of 51.40, you went to the bottom of this. You tried to find some value here, but it seems like maybe there was some iceberg seller sitting here and selling. How would you guys find an iceberg sell on order print, on order flow, or whatever you want to call it, footprint?
Would that be like the same amount on the bid and the ask side? Not the same amount, but like two big numbers?
You would have to explain it, right? So people can, if it's the same item, the same quantity, similar quantity, it could be, right? But if you're coming to a same level, like you were coming here, like let's say 51.20, if you guys remember, 51.27 had to be reclaimed for us to be bullish. Do you guys remember that level and why? Do you guys remember 51.27 or you guys forgot? You guys have some short-term memory.
Nice. Help us out here, guys.
Isn't that the prior all-time high break from March?
No, so let me show you why 51.27 was super important.
It was the
analysis.
access low.
There was single prints that we were watching for, and here, and let's just mark it. There was 51.27 was the key level. So if you guys remember, we talked about this day, it had a double distribution and we needed to crack 27. Anything below 27, we were bearish. And then they had the opportunity to go to all the way 53 to 57, 57 being the all-time high breakout from previous consolidation. And we said, you crack this, we can catch this. If you don't sniff this 50.27, high chance you're going to consolidate and continue the trend down. And obviously that's what happened. So now if you really want to shift the gears, you know, on a bullish side, crack this, we're targeting this range to be reached. Does that make sense? Okay. I will assume the silence means yes, but okay. So now on the weekly time frames, right? When you look at it, are we in balance or out of balance?
Out of balance.
Yeah, we're out of balance. We're framing down. We're putting in lower lows. So your weekly is framing down. So this is your previous week value area low. And then you would have the previous week value area high sitting somewhere at 20s. Yeah. Previous week value area high. And then you would have your POC here if you care to have it. This would be your PV POC. So now, you know, if the bears wanna, I'm sorry, if the bulls wanna get something going, what's the level from weekly time frame you wanna see them auction above? Or let me give you a scenario. I swung some SPX calls for tomorrow, well, what's today? For tomorrow. If I'm approaching this 40 level, should I add to my position?
No.
No, I want to close that position because there's a high participation where they rejected this value when we came in last time. We went below the value, then we bounced where we bounced, and then they auctioned higher. And what happened there? They said, no, our value is still lower. Please go search buyers, right? And they went searching for buyers. And what happened? Last time they found buyers here. Where did they find buyers now? They made a
5,000.
higher low. Where's the change of character happened? If we break this, is this change of character or what? It's a trick question.
Not really.
No, this is a break of structure because we're still making lower highs and lower lows. This would be a break of structure. Your change of character happens here, which would be a big level because that is very close to 50.63, that would mean that you would most likely catch something like this. As long as you're, of course, able to auction about 27. Does what I'm talking about make sense to anyone? So if we do get a bounce, I'm watching to see how do we react to this value. If we accept inside the value, then you can have potentially the traverse, right? You have the 63 minor levels in between. Well, this one's not minor, but you will have levels, but ultimately aiming for this right here. So they have to reclaim 38 from the weekly perspective, and that would be a, you know, a good pivot for the upside. Okay. And then ultimately and final, now that I have the weekly time frames, I have the monthly and Q time frames, I'm going to go down and I'm going to change this guy. I'm just going to turn it off. And then you can use your SVP session, right? We turn on the SVP, and now I'm looking at the daily time frames, and I look at those in 30 minutes to see what's going on, right? And what is it that you're paying attention to when you're looking on the daily profiles? Especially, you know, whether it's trending market or bullish, whatever the market is. Why look at the daily?
For the overlapping profiles?
You're looking for overlapping profiles. You're looking to see if the auction is changing day to day and if the trend is aging or if you're getting out of a balance, right? So if you think about this, this was pure balance. You have a lot of overlap here, you know, 52, 58 to the lows of 51, 57. So this was consolidating. Then you have a trend up, and then you see the value area high shifted higher, then lower, 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 lower. So basically they consolidated here inside of this range. But then when you're trending lower, what do you want to see? So here's our lower, right? And if you look at this on ETH, I'm just going to hide TPO for a moment. So you see the value, right? Value area high shifted. There was a little bit of overlap here. Then it shifted down again. The value area high, the low, everything shifted. So tomorrow, if they open within, let's say this and this, what does that mean?
Trend is slowing down.
Trend is slowing down. And I would be, I'll be very careful, you know, shorting anywhere near this level, yellow and this level here. I would be very careful shorting here. I would also be very cautious in what up here. If the red
Going long.
give it away, then I don't know what will, but that would be going long because that's previous week value area low with the daily value area high. Last time we went above and inside here, we got rejected. Here, we also got rejected on the PD. So is there a chance if we open somewhere in between here that they can auction and have a two-way auction where the short-term players step in a little bit? Because remember, as a short-term player, you're looking for fair price. And if we establish that this is now a fair price for 2 days, they're going to buy the bottom and they're also going to sell the top. And that's what I would look for as well. Does that make sense?
Yeah, short covering as well.
Yeah, and it would be potentially some short covering rally. And if you're to, let's say, crack this previous week value area low, this little zone of 2 points and 3/4, is there a chance that they can then push this to 63? Yeah, certainly they could do that, right? And I would just pay attention, right? You know, how is it doing in terms of value placement and value width as they're doing this? Can they get back inside this, if you want to call it, you know, a 3-day range that they had? They're still putting lower lows, but then they tried to go back inside. They got rejected. So can they bring the price back here? If they can, that's good for them. That means they're, you know, rejecting the prices lower. They're trying to find new net buyers, higher prices. Ultimately crack 27, then they're going for the 51, 70, 80 level that they will be targeting. So far, does it make sense? I mean, I covered PowerPoint, each step, quarterly, monthly, weekly, daily. And then the last piece I do is I look at the
Hey,
TPO.
Shorty. Sorry. If we reclaim previous week value area low, is that the 80% rule for the previous week?
Then it has a very high, it has 80% chance that it can do this. That's correct. That would be what you're watching for on the weekly right here. And, you know, does it ultimately go like this line that I drew up? No, right? There are some levels where, profit taking needs to occur, like whether it's 80, whether it's 63, and then you have a little bit of, I don't want to initiate any trades in here, but here, peak above and fail, it can surprise a lot of people too, because all these bulls would say, I told you so, man, we're in a bull market, and then they get slapped because you are framing down on this previous week value area high rejection. And this is, if I was to deliver most pain, this is exactly the scenario I would deliver. The war news slow down, get people excited, man. Stock market, go buy it. And then you just deliver a lot of more pain to the bulls, right? You take their liquidity.
Yeah, and I've only got one update on my news thing about them just saying it was a trivial issue. So I haven't heard anything else about the Iran stuff yet.
Yeah, I mean, they dropped the news really, really quick this weekend. And I mean, this is a poor low, right? There's a poor low right here. And then you see us where we closed, 503. That was a good level. So tomorrow, if they can, push this a little bit higher and ultimately, start bidding about 29, it looks pretty good for them. Okay. All right, so we went from concept to application and putting together a daily plan. A lot of you that don't put your own daily plans, I think will learn to suffer till you do start putting your daily plans together. When I do watch lists, I'm doing watch lists for you guys, but I'm also preparing myself for the market the next day. Okay. And if you guys don't start doing that, I promise you're making a bigger problem for yourself down the road than you're making it for anyone else. Right? You have to start putting the plans, even write it down on a notepad. I have a little notepad that I put this level, do not short below, or don't go long above this or below this level, right? You have to start putting some stuff for you and start executing those plans in terms of how you structure the daily plan. If you don't play those levels that you look and then you play with somebody else, well, your somebody else account might look like yours, or yours might look like theirs, right? So I would strongly encourage you to do this and see if you see something that stands out in the way you play it, size down, let them play it out for you and see if your levels and your idea how you're seeing market plays out. Okay. Any questions so far or at all on volume profile?
I have one.
Mm-hmm.
If you, at this level we're at now, like you say, not to short it, but if you don't see buying pressure start picking up, would you say just give it a moment still, or would you say maybe that's still looking bearish?
No, I mean, it's a very good question, right? So we haven't really seen the access low yet come in with the aggression, right? And that's what I was saying. When you're looking for a proper low or high, you want to see some single prints show up. I would say these single prints here that you see, that's 3 periods, of TPO. It's not as, I would say, as aggressive other time frame participants coming in. Is there a high chance that we, auction tomorrow, let's say to this level here, and from here you take a short down? That would be a much better short to first take it from here than me shorting, overnight this here. Does that make sense? I would look for a short opportunity here versus here at the lows. At the lows, here that you could find some, bottom people searching to buy it and cause a little stop loss for you. Here, if you take it, I mean, it's a higher chance that you will be more successful and have more reward than taking a short. So previous week value area high, PD value area high. I mean, even look at the TPO levels right here in this range. This becomes massive here and super important. So if you're going to short, don't short the bottom. Look where the previous rejections on the value happened and try to join there. And this is the red zone is where I was short.
Gotcha.
Yep.
Plus that low, if they're going to present an opportunity to short that, you'll see it.
Oh yeah. I mean, if they come in, let's say overnight and we gap down, like tonight at 6 p.m., we gap down below this, well, something happened and, sellers are still very aggressive and they gap down, true. But then if they reclaim this 0375 during the day, I will close that short because they're most likely going to auction to this zone that I just highlighted here. This would be a very, I can even shorten this a little bit. This would be a very big zone here for you guys to look for potential short opportunities. We are trending lower. The main goal of the buyers tomorrow, the next day, is to do what? On a daily, what is it?
Start framing up.
Start framing up. Thank you. I was hoping you guys catch that. We need to break the high of the day here, and we want to, we want to reverse the auction to the upside. And right now, when you look at this profile, right? So if you go on 30 minutes, let's see, turn on the SVP. I'm going to hide TPO for a moment, right? If you look at this, right, what shapes of profiles are we having here? B, 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 right? So far, all the B shapes are correct. You did not break the POC here. So tomorrow, let's say they auction higher here, this becomes a pretty good opportunity to short. Let's say you short somewhere here. Where would you place your stop loss?
Previous days, EOC.
You could do POC. Depends, how much tolerance do you have and what's your account size, right? If you're trading ES, right? If you're trading ES, let's say you get in here, you could go above this value or low. Let's say you get in and you want to get in a really advantageous price. You could put it at the POC and above or PDH. But now you're giving, it's a lot of points to give, 21 points on ES. I don't do that.
Yeah.
Why a stop on ES? Can I do that on 3-4 MES? Can I afford that? Yeah, of course. Like, that's not a big deal for me. But every person is going to have a different mentality in terms of risk and what you're willing to lose. I personally, I'm not willing to lose 20 points on ES 90% of the time, 99% of the time. If the trade requires 20 points stop loss, then my strategy on the entry and exit is probably not strong enough. I don't need 20 points. I can get stopped and re-enter once I see some key level. And I did that when we had the recent bounce. I'm not sure where it was. I think it was here somewhere. I think it was 60s, somewhere around here when we had this bounce. I got stopped and then I re-entered like 50.49 if I remember, or something like that. And I drove it higher, but initially I got stopped. If I had 23 points stop loss, maybe I would have survived, but that would be a hell of a impact on your P&L to bear that. So different.
Yeah, that happened to me the other day.
Yeah, so different setups, different people, different risk managers. Most of you guys think of yourself as money makers, but your goal is to preserve the capital. It's really not to preserve anything else. As a
risk
trader,
manager.
you're looking to be a risk manager first, profit manager second. Once you identify your entry for long or short, you're looking to see what level can you afford to lose, how many points, where do you cut the trade and be okay with that. Avoid doubling down, avoid, adding to a losing position. I think that should be a rule for a lot of you. If you see that level you want to go long, let's say tomorrow, let's say they give us, tomorrow they give us this here again. Well, if I'm going 64, I could afford 7 points on ES, but I would need to expect to get a lot more points here, 20 plus points on the bounce. Ideally, right, the way I would trade it is lose it, regain it, and then I would look for an entry, whether it's footprint confirmation or something to give me that there's other people willing to buy with me. I don't want to be the only guy buying when everything's falling apart. Okay. All right. Well, I think that's it for me. I have a birthday party to attend with 40 kids. We'll see you guys tonight. I'm going to clean up this. We'll see how they open at 6, and I'll hop on at 9 p.m. just to kind of reiterate what the plan is for tomorrow.
Thank you, Shorty.
All righty,
Thank
guys.
you so much.
Thank you.
Thank you, Shorty.
See ya.
Thank you.
Thank you, Shorty.